As a forex trader, you cannot make a profitable trade entry without understanding what the candlestick is all about. Each candlestick formed on your chart tells a story. When you see this candle, it is telling you something about that particular time frame. Every candle speaks, and there is always a communication from every candle. And it is the formation of the candle that form the basis of your trade entry.
Because when we talk of structure, it is a series of a candle behavior that defines structure. It is the candlestick reactions that determine structural point. So everything is tied and bound around candlestick. That is why it is important you understand candlesticks. Now there are varieties of candlesticks. The twister top, the twister bottom. When you join candlesticks together, you begin to have different patterns, morning star, evening star, depending on the formation. But I'm not here to bore you with all of that. I want to give you two specific candlesticks that I have traded consistently over time. And I've proven that these two candlestick patterns are profitable for your trade entry. 80 to 90% of the trade that I do are based on candlestick formation. Though I use break of structure, but mostly 80% are based on candlestick formation. So I have backtest this, and I want you on your own to go through your chart and backtest each of these candlesticks, and they form the basis for your trade entry. Remember, the forex market is a visual market. It is not where we meet as a market participant, but each of the behavior of every participant globally is graphically represented on our chart by the aid of this candlestick pattern. So I can look the candlestick pattern from my location and know exactly what is happening in the market, and another person in another location will see the same thing that I am seeing. So please, you need to understand this. You need to pay attention to this. Another important thing I want you to know is that candlestick is not interpreted based on the color. The color of candlesticks is the choice of individual trader. So I can choose to change my bullish candle to black color. I can choose to change my bearish candle to blue color. So do not represent green color as a buy, red color as a sell. That is not what the understanding of candlesticks is all about. All you need is a better understanding, your ability to identify, get this idea, know why this thing behaves like this, and then being able to interpret it to real price scenario. Having said that, we are focusing on just only two candle formation, and these two candle formation we are focusing on is engulfing candlestick, either a bearish engulfing or a bullish engulfing candlestick pattern. You are wondering what is a bullish engulfing candle? Let me show you now. In this scenario, we are having a bearish engulfing candle. So this candle that you are seeing here is a bullish candle, which means that buyers were pushing price to the upside. And on this bullish engulfing candle, you can see that there is a wick here, there is a wick here, there is a wick here, there is a wick here. Now, what does this wick, this part that look like pin, some call it doji, this pin you are seeing at the bottom of all of this candle, this pin you are seeing here, this pin you are seeing here, this pin you are seeing here, what this pin simply represents is that when this candle opened initially, it was selling to the downside. So it means that sellers tried to take price up, but eventually price couldn't go down. Buyers stepped in and pushed price to this point. So because sellers lose it to the buyers, we now indicate the weakness of those sellers by this pin. So in order to show to you that previously there's actually a seller's reaction. So this indicates the presence of seller, but they don't have the strength to take price up. So we are telling you the weakness of the sellers by the use of this candle. So anytime you see wick starting from the downside before the price close bullish, it shows that it is a weakness on the part of the seller. And when you see wick from the upside before price closes bullish, it shows the previous trend of the buyer before seller stepped in. And in the situation where you see wick on both sides, like here there is a wick here and there is a wick here, it shows you also the failure on both sides of the market participant. Okay, so when we have the sellers first attempt and then buyers win, we now conclude with that in this candlestick behavior, buyers won. But in this scenario, if we have a wick and then sellers eventually close price down, it now shows the strength. We will now say in this scenario, sellers win. But in this type of scenario where we are having equal wick, you can see that we have equal wick at the upside and equal wick at the downside. This is a doji candle. It shows that nobody wins. So in this type of candlestick formation, we can't decide who is in possession of the market. It's an indecision. And so when we see such candle, we avoid trading completely. We are not going to make entry based on this type of candle formation. But unlike in this case, there is a different thing entirely, because the body you are seeing here is more than this wick. So we can conclude that buyers won. So having established that, what is a bullish or a bearish engulfing candle? In this scenario, you have this bullish candle. Immediately after this bullish candle, sellers step in. Buyers try to go up, but they fail. Sellers now brought price down. And this price that came down covered completely this previous candle to the downside. So you can see now that this candle in particular covered completely this previous candle all the way to the downside. So we will now, by this idea, say that this candle cover this candle. So if we draw this candle now, you see that this candle now cover this one completely to the downside. So this is a bearish engulfing candle. So when we see this, you can see now we say this wick rejection candle, which is the wick. Okay. Then when we see this engulfing candle, we now conclude that bears are stepping in. Can you see that? So this candle now informs us that now there is a presence of seller dominating based on that particular time frame. And so here at the close of that engulfing candle, we now have our entry. So the trade will close and then we'll have our entry. So that is how we can use this, and this is about engulfing candle. I'm going to show you this on the chart, but let's explore more things. Now, in your trading zone, not necessarily support and resistance, anywhere that is your point of interest, you need to take note of this. Let's assume in a downtrend, this is the bearish candle that we have, and you want to make an entry. You now have this single candle formation. This candle did not engulf this. So we cannot predict that there is a strength for us to buy. Okay, so this is not an engulfing candle. And if you have the second candle form, you can see that this second candle did not engulf 50% of this bearish candle. So this is not a trade entry at all. In this scenario, this actually crosses above 50%, but this is not a good advantage of trade, because pulling back of price to this 50%, it might be that price only pull back to this 50% to fill the imbalance of this 50% and then continue to the downside. And that is why it is not advisable that you trade this 50%. It can be a fair value gap filling of an imbalance. But look at this. In this scenario, we have a complete closure. This is a typical engulfing candle. So this shows that it is not about imbalance. If at all there's any balance in this candle, the imbalance has been filled and price covered it, giving us a bullish continuation pattern. So this is exactly how you can determine the strength of your candlestick formation, both in a demand zone, whatever the zones may be. So you can see how this trend show up. So you see this is a complete engulfing candle in another block, and here again you see another one. So this is exactly how you can capitalize on it. So let's go to the chart and let me show you one more illustration. Good. Now look at what happens here. In this zone, this is our smart money cube. And of course, in an uptrend, if you have a smart money cube, you can call it a demand zone, because that is a zone where you are looking for what to buy. There is a buy demand in that zone. But look after what price does, what price pull back into that zone. So what do you want to see? You want to see a candlestick formation. Now this candle you are seeing here, this is a pin bar. This is a hammer. This is a pin bar. Previously we've talked about engulfing candlestick pattern. But in this case now, this is a pin bar. And remember I said earlier, I said it is not about the color. This candle is still having a bearish body, which is a red color. But it is a buy confirmation. You can see how the price plays out. So the body is not important. We're able to understand that a valid pin bar, the wick, which is the pin of the rejection, will be 2 times or more the body that you are seeing. So if you can get a rejection of about 2 times or more of the wick, it is a valid pin bar. So you will only be looking for 2 types of candlestick to trade: a bullish engulfing or bearish engulfing, and then a pin bar candlestick pattern trade entry. So these are basically the 2 types of candlesticks that you should and be looking forward to trade. So let's go to the main chart and see exactly how we can apply it. Now, just as in this scenario, as you can see, all I'll be doing is just to show you the application of this candle. Remember, over time, we have talked about identifying trends, and now you can use the Bollinger Band to identify trends. So this is an uptrend. Price is above the middle Bollinger Band. Now look at what happened. Price was coming down, and then we have this pin bar. So you can see how that pin bar formation plays out. Look at this one. We are having this pin bar, and you can see how that particular pin bar as well plays out. You see this pin bar, it plays out. Now this is a bearish pin bar. Let me tell you this is a bearish pin bar. But the question is, you don't just trade candlesticks in isolation. In isolation means that because you saw a bearish pin bar doesn't mean you should just sell. It must happen in a particular zone. There should be a point of interest around that zone. Either your support, your resistance, your demand, your supply zone. Can be your fair value gap, can be your smart money cube. So you see, this was opposite the trend, and that is why it is not working. You see that price continue buying, but there is an uptrend. Then look at this one we had. You see that price bought to the upside. This happened, it was against the trend, so it is not valid. Now look at this hammer now. This was in line with the trend, and you can see how exactly it plays out. So let's look for an engulfing candlestick pattern. We have seen what bullish is all about, and then let's see what we need. An engulfing candle, let's say in a down trade scenario. Okay, here we have this push up of price. This is a flag pattern, a bearish flag pattern. Now look at this engulfing candlestick pattern. You see that bearish candle? This bearish candle you are seeing here, which is this particular candle, you can see how it covers completely this previous candle here. So you can see how price sold from that zone. Again, this is another one, and this is a downtrend. Price is below the middle Bollinger Band. So you can see this engulfing and see how price sold. So this is based on point of interest. Forget the fact that I have not marked out the point of interest, but don't go and be trading this in isolation. Okay, do not trade it in isolation. It must be in line with the trend. All right, see this? Yeah, this is an engulfing candle. You can see this one now. This candle here is an engulfing candle. It covers all of this candle, and then you can see how price push all the way to this side. What is our point of interest in this case? From the rejection of the middle Bollinger Band. If you are using the moving average, you can see it from the rejection of the moving average. This is a pin bar, and then you can see that rejection and then see how it works out. Now, this is applicable on a live trade. Anywhere this is applicable. This is for a clarity purpose, and I believe you have learned something new. Please do not forget, look at this. I said from a point of interest, this zone you are seeing here is a support zone. This is a demand zone. So you can see this is the first test of the zone. So if you have marked here as your support zone, when price came, it gave us this pin bar, and that is why it bought, not in isolation, because this is a support zone. Because price already left here the first time it came to retest it, and then gave us this confirmation. That is it. So thank you so much for watching.